Nigeria's gross domestic product has declined over the last 10 years, losing more than $300 billion of its value. Well, that's resulting from low productivity and growth. Now, the Nigerian government is planning to rebase the country's GDP in the current year, while inflation will not address the issue of productivity, unemployment, and growth. And those were some of the comments in an economic outlook note for this year that was released late last week by the CFG Advisory. Adebajo is a renowned Nigerian economist and finance professional. He's also the CEO at the CFG Advisory, and he's here with me in the studios tonight. Great to have you here in the new year. Thank you so much for looking business-like already.
Well, yeah, it's kicked off. As you said, the markets are open.
I saw you looking at the numbers. You just want to see how the market's taking off.
Yes, everybody needs to cover their position.
How's the new year coming up?
Well, the new year is starting out a bit flat. There's a lot of uncertainty, especially with the passage of the budget. There's still issues around the tax reform bill and how that's going to impact businesses. But I think overall, we now get a sense of where we are. We know that for the first time in a long time, there's no subsidy in the budget for the Nigerian government. That has been resolved. So the key issues left now is the foreign exchange and, of course, to see what policies the government will put in place to grow the economy.
We're going to get a little bit down to that. I'm sure during the holidays, Christmas, New Year, I'm sure folks like you don't just sit down back and enjoy the holidays. I'm sure there are phone calls and visits to professional colleagues and others. What sense did you get from business executives over the Christmas, New Year holidays? Phone calls, word of you, text messages. What is the sense of what you got as far as the economy was concerned? Summarize it for me.
Well, in summary, I would call it reform fatigue quagmire.
That's sending me back to the Webster's Dictionary. Reforms, fatigue, quagmire. I'm going to write that down somewhere. Is that the feeling? Is that the feeling by business executives during the holiday season?
Well, yes, because everybody feels they're fatigued. You know, there's all these reform, this exchange, interest rates, subsidy. So everybody feels everything is just too much.
At the
same time, there's a fatigue, and then of course there's a quagmire. Are we going backwards? Are we going forwards? Everybody's just trying to protect what they have, to try to understand how to adapt to the challenges they're having. So depending on what sector you are in, but the investment professionals are not complaining. The pension fund managers,
no, the bankers,
the pensioners, because of course, they're very good assets at very good rates. So they're good assets.
Those were the gainers.
Yes, those were the gainers. So the manufacturers, of course, and the households, it's a different story altogether for that group.
Some folks are already raising prices in the new year.
Well, I mean, you have to look at that. People are not on, because not all these prices, you can't pass on the cost at once. A lot of things, we're not yet seeing the true reflection of the prices. So that's why I was quite curious when the telecom operators were asking for 100%.
Well, those folks have to have a moment in the sun. It's been 10 years. But we'll get there in a short while. But when you talk about reforms fatigue, the excitement of June 2023, you think that's faded out in 2024?
Well,
when you look at some of the economic data of last year, the GDP, the trade surplus, inflation, PMI in December, yes.
Yeah, so where are we? We have to understand the standards. There's a question of trying to stabilize the economy. This is the second budget that this government is going to be, the second full budget they're going to put together. So the honeymoon is definitely over. So you're going to ask yourself, what is the performance of this budget or this government, and what is their performance on the economy? So the problem has been the foreign exchange devaluation. That has caused a lot of problems for everybody. I, in my opinion, believe it happened too fast, too quickly, without the rest of the controls. But now we have seen some stability within the exchange rates. And I think right now, the key thing now is
stability, and I'm going to punch that very quickly.
Yes, we'll get
stability to the upside.
Relative stability now. So the question now is price discovery with the foreign exchange.
Okay.
And I think what people are asking the question is, what sort of policies will the government, because the key determinant for this year in 2025 is which direction the government goes with policy. You see, if the government goes the right direction with policies, we can see sub 1,000 naira to dollar.
Sub 1,000.
Sub 1,000.
Maybe 800, 900.
Yeah, we can see sub 1,000 if the government policies are right that could look at growth, stem inflation, encourage investments, and if we can improve our credit ratings, and of course, if we can get everything together, because we need to get the new balance sheet from the central bank, and we need to understand the true position of the net reserves. You see, once we can get that in place, then you can begin to see some stability, and then they should let the Monetary Policy Committee continue with their management. The rebasing, we need to be very careful. The rebasing would not remove the distortions in the economy in terms of how the levels of inflation are happening. The rebasing has already taken effect with the devaluation. So it is because of the devaluation you've seen the GDP. The GDP in Naira has gone up.
Of course.
The GDP in Naira terms has gone up.
Yeah, because the Naira is soaked, so it looks heavy.
So by the time you convert that to dollars...
And you squeeze the water out of it.
Exactly. It's now reporting at about 200 billion, 199. So the foreign exchange devaluation has already helped with the rebasing.
Actually, that was what scared me when I saw your economic outlook. And I said, and I was scared when I saw $180 billion. Yeah. And I said, hold on a second, how did we get here? But when you look at the GDP for last year, in third quarter, and you saw the PMI data for December coming out of a 6-month contraction, looking at a few notches above 50, and I said, well, perhaps I'm going to ask you, are there signals or signaling from last year? We haven't seen the fourth quarter numbers yet, so we don't know what they look like. December inflation, fourth quarter GDP, and all of that, we don't have those data yet. But if we use the third quarter November inflation, what does that tell you as to where we're coming from into the new year right now?
Well, you know that the trajectory on inflation was already on the way down until the PMS price was finally realigned, and I think we agreed on which line it should be. So you see, when you're doing things like reforms, you need to synchronize your policies. You need to be able to tell the central bank that we're going to make some certain policy measures that will impact inflation, because we all knew that subsidy removal is inflationary. It's a cost push factor that has a direct impact on inflation. So the earlier you decide where that position would be, then you could give the central bank and the monetary authorities the heads up to make the plans. But that wasn't the case. So by the time the central bank policies had gone through reduction of inflation rate, then the fuel price...
Side.
No, not even the policy side came up with agreeing on what the fuel price rate is, and that's a direct impact. So the inflation trajectory went up again.
When technically went out of central bank's hands.
Yes, it went up again. That is not in their hands. So their own reaction was to yet again increase rates. And for that reason, they can't meet their targets of 24% year end. So I think we need to learn that lesson. So there has to be more...
What's the lesson?
The lesson is that there has to be more coordination between monetary and fiscal policy. There has to be that interface in terms of government articulating its policies ahead of time, so that the monetary authorities can
But we hear that every day.
We've learned that lesson now, I hope. So that
in practice.
In practice, so that coming into this year, 2025, we can see something more impactful, so that there's coordination not only of monetary policy, but fiscal policy, but also trade, investment, and industrial policy. The industrial policy needs a lot of overhaul, because you can see the manufacturers are going through a lot of problems right now with the exchange rate, The factors of production are going on, power, increase in power. Now the telecoms also want to increase their rates. So I mean, why do you want to increase rates by 100%? What have you been waiting for over all these years? So if you say that there's been no increase, so that's the problem here with this whole issues. You resolve one problem, another one pops up. So when they increase what will be the impact of 100% increase on telecom fees? A lot of the industry now, especially the financial services, is fintech driven. So that means that costs are going to go up in those other areas.
If the telcos take 100%, it's going to drown through the ecosystem.
It's going to transfer that. So how do you do that? That's not justifiable. So these are the things that we need to look at, because we all need to take a look at the whole economy as a whole. So what happens? The next thing, another sector will come in and say, we also need another 100% increase. For God's sake, I need a 100% increase too.
I need that too.
You need it
we
too.
Can agree.
Everybody needs
agree.
it too.
I need 100.
Yes.
Everybody needs 100.
Yes.
We all need the whole.
But we can't get it.
But we can't get it.
Can you bill I can't bill my clients
100%.
100%. It's not possible. I'll lose those clients. So things need to be gradual, and we have to be more reasonable to be able to take a look at growing the economy. When we grow the economy, then everything is okay for everybody.
Is there a sense of what 2025 will look like from this 47.9 trillion naira budget? Does it give us a sense of economic direction?
Not really, because if you take a look at the budget, it's 30 billion.
The budget is supposed to be a pointer.
Yeah, it's a pointer, but that's just...
Because it's the first document you get for the year.
Yeah, like I said before, the budget is $30 billion. Okay, that's what, 15% of our GDP. So while government spending is impactful, consumer spending from the households is also about 35 billion. It is also impactful. So we still have an economy where consumers are spending 35 billion, but it's just that their purchasing power has been eroded. So this is really where you have the challenge. So the key drivers of the economy, government contributing 30 billion, and you have to take a look at the firm and the households and what's also making the rest of the productivity for the 200 billion GDP that we now have. So what is important is that we need to increase our output, our productivity to about 250, 300 billion.
Give me a second on that. How would you describe the fiscal regime of the current administration? This is the second year moving forward, 18 months, yeah.
Well, the fiscal regime for me has a red flag. And the red flag is the fact that debt service has increased from 8 trillion naira last year to 16 trillion. So that is a red flag, because the debt service at 16 trillion is more than defense, security, infrastructure, health and education combined, which is 14 trillion. So the recurrent expenditure is 14, capital expenditure is about 14. And so when you take a look at the key spending, debt service has now become an issue. So like I've said earlier, and with my other pronouncements, it's important that government should restructure its balance sheet, sell down assets to repay some of this debt. And that way you improve your position. When you pay down debts, you improve your credit rating, both internationally. Local debt is always AAA rated, so that's not an issue. But our foreign debt we need to be able to kind of get out of junk bond status to investment grade to make it cheaper, and that way you sort out your issues on your net reserves, fund that properly, and get NMPC up and running. Because by the time you're bringing in all these dollars in the system, then that's why I'm beginning to talk about sub 1,000 exchange rates, the possibilities of that. So depending on which direction government takes, we could see sub 1,000 exchange rate or upwards of 2,000. So the swing is quite significant, depending on which direction government policy goes.
So I go a little bit back to the budgets. So the whole reforms and policies that we've seen, do you think the budget will be able to fix it?
The budget, like I said, I'm not really focused on the budget. Like I've said, the budget for me is, the concern for me on the budget is the debt profile. I don't think it's sustainable. And 16 trillion that you're spending on debt service, if your debt service was 50% less, then maybe you have 8 trillion more to spend on capital projects. So if you had some significant capital projects, then you could be doing very well and, creating stimulus in the economy from government spending. So what is important for me with government is policy. If you put the right policies in place, then you create the enabling environment for both the formal and informal sector to grow and to begin to increase their output and increase their productivity, which is really for me what is key. So I'm not focused so much on the budget. The concern for me on the budget is debt service is choking available funds that government could have been used to investing in critical infrastructure for growth.
So much has been said.
So policy is the key for me.
So much has been said about getting alternative debt financing options, getting free cash on the table in the manner of speaking. But it looks like the government is bent on just borrowing just to refinance. And that's a problem, not just in Nigeria, but across a number of African economies.
Well, you need to buck that trend, like I said, and that's why I said...
Why is it political, or what?
Well, it's easy. It's the easiest way to go. You still have access. You go to the World Bank, you go to that, you go to the Eurobond markets, and you get this money, and within a couple of months, the money is available. But then it's
considered easy money.
Yeah, no, well, it's easy, but you still need to pay it back.
Well,
okay, but what you need to do is, what are you doing with this money? What are you spending this money on recurrent expenditure, or are you investing it in sustainable capital projects?
But the government official says it's going for infrastructure spending. We heard that for 8 years.
No. That's we need to look at the numbers. So if that is the case, let's point to the infrastructure. Let's do an audit. And I think for me, that's one of the challenges with the World Bank. We need to audit all this expenditure, all this debt profile. The debt profile now is over $100 billion now, both domestic and
foreign.
And foreign, if you translate it in dollars. So we need to understand where these monies have gone to. But that's really not the case. The case is that, for me, if you put the right policies in place, you create a strong regulatory and legal framework for businesses to thrive in Nigeria, then you can do that. As you can see, Aliko Dangote invested close to $18 billion in a refinery. Abdul Samad Isiaku with BUA is also doing the same for a second refinery. So if we create the right environment, Nigerians now have capacity to do large projects. The next large-scale project to Aliko's refinery is LNG Train 7, which is a $7 billion investment.
Yes.
So you can see that even with LNG is having challenges because it doesn't have gas.
Yeah.
It's only operating at 50% capacity. So that's why you need to ramp up production in the oil. This is the low-hanging fruit. These are the goose and the geese that lay the golden egg, or this is the goose that lays the golden egg. Why wouldn't LNG have gas? That's where the government makes most of its dividends, significant dividends on a yearly basis. Now they're having challenges with Train 8. So we need to be able to ramp up production of not only oil, but gas in the oil and gas sector to be able to help Nigeria. Because if we can do that, then a lot of problems will be resolved. Oil is selling for $70 a barrel. Nigeria should not have a problem.
Well, the budget expectation of that is
75.
But again, just to summarize today, and it's good having you here. So give me a checklist: 1, 2, 3, 4, 5. What do you think the top priority should be for this year? Hard, tough decisions that Mr. President has to take and his team.
Debt. The debt profile is too high. It's not sustainable. That's number one. Number two, you need to clear it by selling down JV assets, raise about $30 to $50 billion, and restructure your balance sheet. Get NNPC into shape. Then you need to put up policies that will encourage growth, employment, investment, lower inflation, and get the exchange rate sub 1,000.
I'm going to add productivity there. Productivity, productivity, and productivity. There's no alternative. It's nice having you here this evening. Thank you so much. It looks like you're ready for business.
2025. There's still $300 billion on the table in Nigeria.
Yeah, that's true. You're correct.
We shouldn't.
We should just easy, and that's our own free money.
Yeah.
Yeah, not borrowed money.
Yes. In terms
Once
of
again,
the economy.
thank you so much. The CEO at CFG Advisory. Have a great evening. Thank you very much for
Thank you very
coming
much.
in early in the new year to discuss with us.